it's going to save you money. It's much better. Your bosses are going to be happier. Let's go.
Intelligent Monitoring Group, or IMB, is Australia's largest security monitoring network, overseeing more than 200,000 homes and businesses.
The physical capacity we have is significant.
The company has grown rapidly through acquisitions, most notably the ADT Australia business, and now operates across Australia and New Zealand with a mix of recurring monitoring contracts, installation services, and emerging applications in medical and AI-based security.
The concern was that ADT was such a large transaction that it actually changed the nature of what IMG was before it bought ADT.
At the center of this story is Dennison Hambling, the managing director tasked with integrating dozens of legacy businesses, stabilizing cash flow, and defining what IMB will be: a sustainable monitoring platform or another short cycle roll-up.
I took the job at IMG because I felt that it really needed someone who was going to really focus a lot of their energy onto what needed to happen and then ultimately to build it through.
In this conversation, we unpack that tension, the risks of growth by acquisition, the challenge of trust in public markets, and the future of security infrastructure in a changing world. Here's Dennison Hambling.
The future is now in our hands, and it's in our hands to execute it.
Guys, let me tell you a 30-second story, and I promise you won't regret it. So when I started to take investing seriously, I really didn't have anyone to discuss my ideas with. I knew no one in the investing space, and therefore my process felt kind of lonely and very slow as well. So I went on and found a community of serious microcap investors, people that actually like doing the work. And I'll let you in on a little secret. It's called microcapclub.com. Members have profiled more than 1,300 companies, and over 300 of those have gone on to become multi-baggers. That's the power of this group. The awesome thing is that you'll get exposed to ideas well before institutions ever notice them. And if you want to find great businesses and surround yourself with some of the best investors in the world, head to microcapclub.com and consider applying to join or becoming a subscriber. That's microcapclub.com. Nothing in this conversation is financial advice. I may hold positions in some of the companies we discuss or have other interests. I always aim to stay objective, but please take everything with a grain of salt and do your own research.
What do I need to know about your earliest days that helped me understand who you are today?
Oh, David, you're always straight to the point with your questions, David. I love it. Probably what I would say, and I know I say to people who I do introduce myself to through time, is I was a person who really started walking early in life. My mum said that I started to walk when I was 9 months old. I left school early and went to university a year early. I managed to get into university, finished my master's degree pretty young, and I got investing as a professional investor pretty young. And I was a swimmer, so I swam for New Zealand. And from about the age of 9, my first national title was when I was 9 through to 19. And I was a swimmer, not a water polo player, although I did play water polo. And really the reason I say all that to people is notwithstanding my desire to be part of a team and build a team, I think my comparative difference is focus. And, when I took the job at IMG, it was because I felt that it really needed someone who was going to really focus, a lot of their energy, onto what needed to happen and then ultimately to build it through. So I think that's probably the key characteristic. I think people sense that when they meet me. Hopefully I'm, enjoyable to deal with, but, I'm not here to fill time. And one of the things I say often, David, is we're all dead. And it doesn't, resonate well with everybody, but we are, and that's the reality of life. So while we're here, it's up to us to make the most of that opportunity, and that's the kind of attitude that I bring to the business and all the things that I'm involved in. We're trying to make a difference, and we're trying to use the best of the time that we have while we're here.
Nice. That's very interesting. But I'm kind of curious about where that sense of urgency comes from, because going to uni 1 year before your time, and then I feel like there's always some sense of urgency. So maybe you can explain that to us.
Yeah, look, I'm not sure is the honest answer, and I think it's one of those things, like we're all a combination of upbringings and DNA and situations and all that. But I think in particular, my parents were, people that did a lot, and they were very, social and capable. And my mum in particular was a very, a great mum and really pushed me along. I was a foreign exchange student when I was 15. I lived in China for 3 months by myself when I was 15. This was just after Tiananmen Square, and there was one McDonald's. And so, it was a
Wow.
family that really bred, sort of, there's no complacency sort of bred into me from a young age. So look, I don't know there's a good answer, but I definitely understand it to be different than most people. And a funny sort of
Mm.
story I might tell is that, when I took over IMG, I'm very focused. We're a service business on the values that of what we need to be successful as a group together. And it's not because I've done courses or studied it, it's because I've seen a lot of business in my investing time. And so I went out and asked the business and said, what do you think? And I've got 3 values that I think are really important to an organization. It can be a sports team, it can be an organization to be truly successful in the short term, but also to endure. And for me, those values are honesty. So, you need to be very honest about how the business is going, what you're doing well, not doing well is more important. You need to be transparent. You need to be open with your people. Everyone needs to understand. And you've got to be inclusive, which is, a team is made up of lots of different people and you have to figure out how to work together. When I took that to the business, they said, yeah, like we're okay with that. And I said, look, challenge them. They don't have to be the values of the business. You tell me if you disagree. And they actually came back and they said, we need to add one more value. We think excellence needs to be part of the value system. And I said, that's actually really interesting because for me, that's implied. I don't get out of bed every
Mm.
day to be worse than I was the day before. I don't need to tell myself to be excellent. I'm always trying. That's just who I am. And so, I thought that was quite interesting in that it reflected that, I kind of take that for granted that, people need to be told. So that is, how the IMG values came about.
Nice. That's actually a pretty interesting story, and I always love to hear these anecdotes where, yeah, you see the values in the presentations and all that, but you don't know like how they were built. So yeah, I guess it's always a bit less fancy than we imagine it,
Well,
but
no,
it's very
I think it,
interesting.
yeah, it was a really material point for me, David, and not to
Uh huh.
sort of grandstand on it, but again, like
Yeah.
I fully understand. I mean, I put it in the context of when we bought ADT, it was off Johnson Controls, JCI, a Fortune
Yeah.
300 massive global firm with probably hundreds of HR staff around the world thinking about these things. And we had none of that. And I was very, very uh, clear with the business. I didn't want to talk about values and have them put up on the wall and just be words on a piece of paper. And I'd rather have nothing than have stuff that didn't mean anything. And so for me, it was, and I say to people quite seriously, like it's probably the most serious thing that I am about this business is making sure we understand those values because at the end of this journey, what we're really trying to do is create an enduringly strong service business. We're through 600 people now. So, how do you get 600 people to deliver, a really high quality service on scale? You have to have there has to be a common something. And so, again, I always make that point. Like, I'm not doing it because I've been told it's a good idea. I'm not doing it because I've seen other people talk about words. I'm sure you could make different words up, you could put it differently. I'm doing it because I actually believe it. And it's like, I think these are the things. And I always say to people, if you can live a life of honesty, transparency, and inclusivity, your life will be good. By the way, it's very hard to do. So it's very
Yeah.
hard to be totally honest, totally transparent, and totally inclusive for anybody. But if we strive for that, that sets us up. And I think where it resonates most for me in this particular industry is the piece about honesty. And, when I look at the history of how security services have developed since the start of electronic security, really back in the 1940s, I think what people did regularly was they took the latest level of technology. So today that would be AI. And then they went and became tied to it. So the product and the service came together and they meshed together, which works really well for a period of time. But when the product starts to fall behind, and if it's entrenched in a service company, ultimately it will pull the service company down too, and it will start to fade and disappear. And that's why I always say, Chubb, not to be disrespectful, but well, I'll say ADT, Tyco, you know, I'll say Honeywell. I don't know it as well. You know, Chubb, I don't know it as well. But I think all the leading companies of 10 and 15 years ago globally have had that dynamic. And so you need to be honest about the product. If you're a service company, the products you are using to enable that service, you have to be very honest about all the time, so you don't wake up one day and find that you're falling behind.
Yeah, that's extremely interesting, and I guess they also kind of fall into complacency. I don't know if that's a factor.
Yeah, definitely.
Um, that's definitely very interesting, and I'm glad you're kind of going into the business side of things, because I really wanted to ask you this big question, because in the last presentation and maybe in the last communications as well, you've been talking about like this $9 billion addressable market and long-term to mid-term target of 30% market share. So can you guide us through how do you plan to capture that market share? And I think that ties very well with what you were just saying, because maybe there are some spots in
Yeah.
the market where you can differentiate yourself.
No, it's good. And look, and to be upfront, I've had, I think there have been some investors that have struggled with why we've said this. What does it mean?
Yeah.
Is it a target? Is it a? And I mean, just in the first instance, all what I thought was really important was we wanted to make a clear comment about what we think the opportunity is, and to dissect that. The opportunity has, like, I feel like the last 6 months or so, things have become even clearer still for us in terms of what the mission is and what the opportunity is. And like fundamentally, at the minute, what all of this is about is using cameras and AI technology to either replace existing physical labor and also find new applications. And so what we decided to do is look at the market that exists today and where physical labor is used, which we are starting to replace with particularly our live video monitoring product, and say, well, what does that mean? What's the real market size that we're looking at now? Because it's not the traditional market of intrusion alarms and access control. It's bigger than that now. We're now competing with different companies, and there's an opportunity. So the $9 billion came from that. We said, what's the traditional industry? What are the industries we are now working in and looking at, and how big are they? And what will the effect of we will lower the price in that industry. We will only be a portion of it. What do we think is a reasonable, guide to the size of the opportunity, so that anybody that comes on the journey with us knows what we're looking at, why we think this, could be and can be a significant investment. The second point was the market share one, and I've made this point, through the journey. Like, there is no leader, there is no leading service company. There are names that are known.
Mm-hmm.
There are some very good companies too. Like, it's not a comment about our competitors, or there are great little regional operations and quite big businesses too. But there's no PricewaterhouseCoopers. There's no Deloitte. There's no, a Goldman Sachs. There's no JP Morgan. There's no sort of high service equivalent in our industry. And I think that's the opportunity. So when I look at other industries, and I've had experience in professional services, myself, but also in investing in others, if you are successful and you create the leading player, that is usually a 20 to 30% market share of the industry type of player, and not in every market, but in our part of the world, down in Australasia, that's quite common. So when we took the 9 billion and we said a market share, you get a very big number. I mean, you get a vastly different number to what we are today. So that was in the first instance. All we wanted to do is to be transparent about what we're trying to make it as clear as we can for people what the opportunity is. The second question is, well, how are you going to do it? And how successful are you going to be? And I think that's the one that probably stumped people. And the honest answer is we don't really know. Like, we know we're growing. We know we can grow faster. What in our journey, we've been very opportunistic. I don't like the word because it sounds a bit commercial, but I think that journey will unfold in front of us. And I don't know that it's possible. I don't think the market's $9 billion in 3 years. I think it'll take time. And what we're finding at the moment is that piece. The time frame is probably the biggest issue, actually not the market share and not the ultimate size of the market. I think the ultimate size of the market will be significantly bigger, actually, but it's just going to take some time for people to adopt the technology. And I mean, really, that's what's going on now. It's the customer um, understanding there's an opportunity to do things differently and better and cheaper, and then being prepared to adopt it on scale. And so for a period, I think it'll be a bit slow. We're certainly not going to double our business organically in 1 year at the moment. But I think as that story starts to move out, it will accelerate. And I think, with the benefit of a few years, and I've been around long enough now and done this long enough that a few years is a bit of a vague concept, but, it is something like, you'll look back in 3 and 5 years' time and realize this was a really material moment for the industry, and with all things going according
Yeah.
to plan, really material for IMG. So look, I think like the plan is organic, just to be clear. Like we don't have a plan to go and acquire, to deliver that market share. We have made a couple of acquisitions recently, but we are very much opportunistic and strategic now. We really do have everything we need to now. We need to execute. It's all about execution and delivery and customer satisfaction and customer understanding and our end-to-end journey. And to be really honest about it and clear, like we're not perfect yet. Like we are learning and improving that journey as we go. But I feel like we're making some really, really good strides right now. And in recent last couple of months and recent weeks even, we've really come together as a business and started to really get on top of what we need to be, how we need to deliver in order to be the company that I think everybody in IMG wants us to be.
So, from what I understand, is this more of like an aspirational target where you get the whole company moving forward? Uh,
Yeah, no, definitely. I mean, I think, yeah, that's exactly right. But it's about putting a clear marker about our, you asked at the start about focus, and I'll say to you, like, will Dennison Hambling be happy if we grow this business at 5% per annum, every year for the next 5 years? No, I think that clear answer to that is not what this business is about. What do we think the opportunity is? We think there's a $9 billion market. We think there should be a player that is a 20 to 30% share, and that's what we are here to try to achieve. Do I have a or do I have an exact, month by month playbook that I can share with people that will tell you how we're going to do it? No, I think it's doing the work at the moment. But I think, and I've made this point fairly consistently through this, I think we're in a penetration type of situation. So if I always say to people, think back to like pay TV. So think back when Sky was going around Europe and all those, and it started at, the first 20,000 homes, the first 50,000 homes, the first 200,000 homes, first million homes. Like we're in that phase at the moment. And our service, particularly around ADT Guard, live video monitoring, is new. Like it's a concept that's very easy to understand, but has never been available before. So until people actually understand it's available, they don't know. So we have to get
yeah.
it out. People have to know. And then I think when people know, they realize the protection it provides, premises. I won't be surprised that some of our European shareholders will say to us, hey, do you mind coming up, up here and helping us out? It'd be great. It'd be great to be in Portugal and have a force field over my property whereby if anybody steps on that property, you will respond, deter them, and the police will turn up very quickly.
Wow, that's really interesting that you say that, because one of my questions was actually, will you ever try to expand internationally? And if so, what criteria will you use for that expansion?
I've as I've shared the journey, with you and with other investors as we've gone through it. I mean, what I've certainly come to realize in the last year is we are unique. And I actually presented at a global growth conference in Boston with Canaccord maybe a month ago now. And a potential investor asked me, he said, what's the difference between ADT in Australia and New Zealand and ADT in the rest of the world? What's the difference between ADT in Australia and New Zealand and Verisure? What's the difference between ADT in New Zealand and Australia and Chubb? And the answer is, we catch criminals. Like our video monitoring service fundamentally is a security service, and so that is different. And so for me, the penny has dropped that we are unique globally, and we've built a end-to-end service and integrated it probably first. Now others will do it. This is not a situation where we can IP it, wrap it up, but it takes a number of pieces to come together to do it. There are small operators around the world that have also realized this. We're not unique only being the only player, but we are unique as a major and branded player. And so the answer is, would we be open to it? Yes, I think we would, but obviously in our part of the world, Australasia, the corporate market is littered with companies that have tried to expand too aggressively globally. And so the bar for that is very high. What would be the criteria? We wouldn't do it as a startup. So you'd need to be acquiring a business that exists, that effectively has the same sort of dynamics that we got when we bought ADT in Australia and New Zealand. So we would want to have a market presence already. We'd want to have a profitable, cash flow positive business. We'd want to be able to look shareholders in the eye and say, hey, on day one, this is a good deal for you. This is not a deal that we're asking you to trust us financially. We will show you this is good for your bank balance, and would have to feel like we had a path through bringing essentially what we would call our ADT Guard or live video monitoring product to market quite quickly. Certainly within the first 6 months. If we could tick those boxes, I think that our 2 of the 5 members of the board actually live overseas. One of our board members lives in between Spain and Hong Kong, and one lives in Geneva. One of our other board members is a global executive for global level companies around the world. Has been, our other director is a market leading player in his sphere. So we're not scared. We're not sort of wild people looking at the world with awe, but yeah, if the right opportunity presented or came up, I think we would. The question would also just be timing, and just we want to be we want to be very comfortable that we know what we're doing. We really understand what the plan would be, and I think we are getting to that point where you would say, look, we could manage it. But we would want to be very, very clear that we know what we're doing.
Perfect, Dennison. Makes a lot of sense. And I'm just sort of curious around the capacity, because obviously you have limited capacities, not infinite. And I want to understand how much capacity do you have to support this growth that you're planning ahead? And will you ever have the need to expand capacity, and what investment that implies?
So the question you asked before was a very specific one about going global, and I think that's a very different scenario, right? So I think we just park that as a question, and one that sits there to be answered or not answered. We'll just have to see where the journey takes us. More specifically, though, in our region, in our house, in our area of influence, in our business that we understand, in our markets and regions we understand, we have got the acquisition facility from National Australia Bank, which still has $33 million of capacity. I think that's the right number to it. We're obviously generating cash now. We don't feel like we need any more or additional funding from shareholders to execute any plan that we see in front of us in our traditional markets or in the markets to which we operate. And so, we don't have any plan. Again, in the hypothetical question you raised about, well, if you were to go international, look, it would depend on the size and the opportunity. Again, if it was really accretive, gave us a start in a market that could materially improve the growth prospects and all those things, we could, I'm sure we would be able to raise the money. I think one of the really interesting features again, for those maybe that aren't in Australia, is we're now about the 750th size company in Australia, and there's over 3,600 listed companies in Australia. A really important size level is about the 300th company. And if you make it into what's called the ASX 300, you are into index and passive land where there's, substantial capital. Again, for those not operating in this part of the world, Australia is the fourth largest funds under management market in the world. There is a massive amount of capital down here. And so we are now through being considered a micro cap company to being not a large company at 250 million market cap, but we're not the $7 million market cap that it was when I took over as MD, 3 odd years ago. But we're at a scale now where actually, if we found something of scale, we would probably find it quite easy. Again, subject to it being very accretive and a really successful financial deal. I actually think we would raise the money very, very easily down here. So we're not worried. We're not short of money. We're not short of capital. We don't need any. And the business is now in that great shape. So I always sort of summarize, David, we're at a point now where we've got everything we need. We're refinanced. We're in rude health in terms of the balance sheet, the P&L. Now, the future is now in our hands, and it's in our hands to execute it. So the next phase really is primarily proving up, the story or the story that I've told around AI and cameras, as it is about M&A. M&A look. We've made a number of acquisitions to get to this point. The chances that we've finished doing M&A is probably very low, just by probability. But it's not it's not the feature of what we do. It's very much a supplement, or is around strategy. Yeah.
Perfect. And sort of on the side of operational capacity, so you have these monitoring centers, and how much more can you support?
A lot. Luckily, when we're in the industry is in this really interesting crossover period again around the technology. So at the moment, most of what we do is the historic intrusion alarm monitoring. And when we, particularly with ADT, and particularly in Australia with ADT, they built the most recent large monitoring room. We call them bat caves or control rooms or operating centers. They've got various names around the world. And when they did it, they built it when the industry was still expanding, and they were expecting to expand a lot. So the physical capacity we have is significant, and the incremental capacity you then therefore need to grow is actually, quite little. It's really people and seats. And so to give you a feel, if you went into our ADT control room in Rydalmere, our largest room, we have 4. We have 1 in New Zealand and 3 in Australia. You would probably find at its peak, it is only half full. And that's in the current floor plan. You also would find that when they built that control, and they actually built it to build another level on top, they were thinking about the future, then saying, well, could we double the size of? Now, these are highly regulated rooms, so they're not easy to build. So you have to, it's very helpful to have had that foresight planning. So yeah, we're in a very privileged position where marginal growth will be should be at quite high returns, and
so like the contribution margin from the extra employee or the extra client should be kind of interesting if you're running at 50% or so capacity, right?
Yeah. And look, that's physical capacity. I mean, in terms of the staff themselves, they're all very busy. So, we're running the staff, around capacity, but we have the actual footprint and capacity to significantly grow. Yeah.
Makes a lot of sense. And I'm sort of curious about who makes the decision to, let's say, onboard you as their security provider. So when you go to a client, who is the person or the group of people that are actually doing the decision, and what are their incentives? Is it more like a cost-conscious decision, or it's more about like the actual results?
Yeah, it's actually a really insightful question, David. To give you credit, like I think that's a great question.
Thanks.
Like what we're finding. Well, so to answer the question, usually it is either so in a commercial enterprise world, particularly around where we're looking to compete around security using AI cameras, it's probably a security officer. So somebody within a big business who's said your job is to worry about security, or it could be procurement who have said, "Hey, we've got this outsourced contract. Can you please go and assess it and maybe find a cheaper provider?" So it's usually and often if it's a security person, it's someone who's been in the industry for 20 or 30 years, who's found a corporation to work for to use the expertise they built up as a security officer of some form, and they now work for X large company, call it Amazon, right, as the security person.
Yes.
Now, the reason that's important is that that is actually a little bit of a challenge at the minute, because what you're dealing with is people who are either cost conscious. They're the best ones for us because we can compete with our new technology incredibly well on price. Prices we can outcompete any traditional security offer today without me even getting out of bed in the morning. The more difficult one is the security officer and the industry tech expertise, because they are more skeptical. They are typically, probably got a physical guarding or patrol background. Essentially, they're probably security guards themselves at one point in time. So the
Yes.
idea that a camera with back to base and through to the police can do that job is something they don't necessarily resonate to straight away. And you have to prove it. You have to show it to them. You have to show them why it's good. And even then, they're a bit skeptical. And so it's where I've come up with the line, David, I use sometimes with people where I say, they're sort of like, well, this camera thing and AI, I'm not sure. And I sort of say, look, you do realize that your car can drive itself now, don't you? Like the world has moved on. And it is a bit like that. And the reason it's a great question is we've just made an acquisition of BNP, which was our most
Yes.
recent acquisition. And the reason for it is really for this reason. What BNP gave us was a existing player in that market who does use labor, but has started and does start to use cameras. So they credentialize us straight away so that when we go and have these discussions, we're going in like a company that's already doing this and then adding technology to it, rather than when we turned up as ADT guards straight away, we're just a technology business. And so, as part of that, and we have not made a public, particularly public comment around it, but we've had a gentleman join us in a senior management capability who was the founder and managing director of the largest patrol and response company in Australia, and he is now our general manager of ADT Guard. So BNP effectively works with him, and we've hired one or two other people around sales so that we now are going to these people, that the question you asked, and saying, hey,
Yes.
we know what we're doing. We've got people that have done this for a long time too, that sell in this market, that understand tenders, they understand all the things that you do, and they probably know you, like they've probably been around. Why don't you just give this a try? It's going to save you money. It's much better. Your bosses are going to be happier. Let's go. So yeah, really, really great question. The only other people that get involved potentially in the juniors in IT department. And so sometimes, particularly around access control, they can be a well, can be an important sales party for us in terms of we need to make sure they're comfortable with our use of cloud and technology, so their own core operating systems aren't vulnerable or they feel they're vulnerable. So we often have to just make sure we manage and navigate and work with the IT teams as well as a side to make sure that everybody's happy. But they're the big three for us.
Perfect. And this will be a sensible question, but I'll ask it anyway because I have a personal anecdote with this. But I want to understand what's the corruption landscape in Australia, because at least I know someone that like works in cybersecurity, and they were in a very similar position to you, where they had to sell like some cybersecurity services to a company, and there was this chief security officer or something. and he essentially wanted to get paid to let them be a do the service for them. So just curious about that.
Yeah, well, look, on that basis, I think Australia is a very great place to do business. So there's I
Okay.
would say I won't say that it's never happened. I'm not aware of it. Certainly not in our business, but even in the industry, I do know back in the '90s there was one or two cases that got sort of prosecuted or discussions, government contracts and things, but it's not a feature of business for us. I think the wider context, though, is that security in this world we live in, and with social media having sort of globalized threats in terms of people,
Yes.
read what's going on around the world and crime and certainly some of the social conditions in Australasia aren't that different to other places in the world. And so, there is now, the sadly, is what the way I'd actually put it. Sadly, the right kind of preconditions for people to be much more aware of it. And I think the two big areas are, shops with shoplifting and shrinkage, and that
Yes.
is in parts of Australia that has really significantly picked up. And one of the notes of reporting season for the full year results in Australia was around the retailers all talked about shrinkage picking up significantly, and in particular in Victoria, which is a large state of Australia. Same thing was in New Zealand. The other area is just, I think, general household security and just the feeling of, being comfortable in your own home. I think it's different in different parts of Australia. Some parts are like any big geography, there are better and worse parts, but certainly there are some large parts of Australia now that are feeling less secure, and we see that in our inbound inquiry in terms of
Okay.
where the inquiry is coming from and what people are looking for. So corruption doesn't worry me, but crime and security is definitely on the agenda.
Perfect. Yeah, that helps a lot clarify things, and sort of jumping into acquisitions. And obviously, you've done one recently, and you already explained the rationale behind it. So I won't ask about it, but I really wanted to ask you again. I know I asked you in the last interview about your rationale behind next acquisitions. What sort of criteria has to be met for you to say, okay, I'll pull the trigger on this one?
Yeah, look, I think now, and it's sort of reiterating what I said. I think now it is only really a couple of things that we would be looking for. Um, Firstly, there's always the opportunistic one. So if somebody turns
Yes.
up, it fits into what we do. It's would be very accretive and it adds some value to us. The answer we're never going to say sorry as long as we can handle it. We have the capability, and we're not overly stretched. We would look at it, and so we'll always look at anything and everything, but it would have to be very opportunistic. Now we don't need to be doing it for the sake of it. The only other two criteria are the ones one we haven't talked about, and that is diversification. So if it actually there is some room for diversification around monitoring. So our monitoring rooms monitor lots of things. If there was a way for us to utilize that capacity with a highly, effective and incremental kind of acquisition into a different area, I think that would be interesting, and that is historically a path that has been tread globally. To call one area out, like fire, for instance, fire monitoring, and we do fire monitoring in IMG already, and there might be opportunities for us to do that. It's a really attractive industry. And then the
Mhm.
final one is the one we talked about, which is international, which is, we have this unique service we have developed that seems to be very effective, very high value, and the demand, we're certainly starting to see come through. Given we have a lead, if you could find the right asset and the right way to do it, would you do it? Other than that, to be honest, David, like we're not out beating doors down trying to find things ourselves. It's more about whether things come to us. Though the days of us needing to beat doors down to find something we need, we don't really need anything anymore. Probably the call out I would make, though, just I guess to be completely transparent, and again, there's nothing on the radar actually, but I still think we're a little bit weak in some geographic areas where we are we've got some really strong centres around Australia now. Like WA now, we're very strong. We did the Western Advanced acquisition as well this year. That is a really strong group of talented people doing high quality work, and we would be the clear leader in WA, I believe. We're strong in other there, but there are still a couple of geographies that I look at and go, you know what, like we don't really have enough mass there to service that market and then leverage that for our national footprint. But there's nothing actually that we're looking at. It'll be a case of whether something emerges.
Perfect. Yeah, makes a lot of sense. And the other side of the question is the valuation aspect. So you have been able to find targets at 1 times to 4 times EBITDA, the 3.7 times EBITDA. So how can you find these companies trading so cheap or like selling for so cheap? And why isn't private equity or other players trying to acquire them already?
Uh, Great question. So firstly, there are others interested. So private equity did buy a business in Sydney recently for, I think, 7 or 8 times EBITDA. And it's a quality business at a different price. It could have been something we would have looked at. So um, let me try and answer it this way. We're
Yes.
very disciplined, and we won't overpay for anything. So that may stop us ever doing M&A. If prices move, we won't really move. Now, there's a little bit of flexibility in that depending on the quality of the business. So, it's not a complete hard and fast, but, unless the value is very demonstrably there, and I usually say, 3.5 times EBITDA in our hands, a business operating in our hands, if we can get that, then that is, there's no conversation we have if that's not the first thing that's ticked off. So when people call me and say, are you interested? I say, well, you understand, there's no conversation if you think if you think the price is different, there's nothing to talk about. And we've walked away from a number of things, just to assure people. So I have absolutely seen the situation where capital starts to look and see what people are doing and go, right, and the prices get bid up. And what I will not let us do is not while I'm here anyway. So unless there's a change in management, we won't chase prices, and we haven't had to. So that's a pretty firm commitment I'd make. Again, with a little bit of wiggle room just around the quality piece. But that sort of 3 to 4 EBITDA is we're not going to change from that. Private equity has is a feature. I think the honest answer though, David, if somebody really wants to play in what we are doing in this part of the world, they'll just buy us.
Okay, got it.
So a different question might be, do you ever get approached by private equity as a business? And have you ever, had interest? The answer is absolutely. Like regularly I meet with private equity or they express interest. So I don't meet with them per se, but, like we are on the radar. People look and say, rather than starting by a small business and muck around, it looks like IMG is very interesting and what they are building is really interesting. And, from my side, look, we will look at all options. We're not about to engage in something. I'm not pre-flagging anything, but I'm just saying, I think to answer your question, if you really wanted to play here, and by the way, I think industry players will probably pay even more than private equity would. If you're a global player looking at what we're doing, you'd say, hold on, that's interesting. So at my job is to build a great enduring business. And if you do that, you'll create a company of a lot of value. And then the question will be, one day at some point, will somebody come along and price it? Look, the reality is they may well, but it's outside of my pay grade, and it's not something we're doing. We just want to build a great business that lots of people will value.
Perfect. Yeah, makes a lot of sense. And another thing I wanted to come back to is you said basically acquisitions are kind of secondary for you. You're more focused on the services part of thing and actually building like the business already organically. So is it wrong to view you as a private equity platform trading in the public markets?
Oh, look, I mean, I'm not sure. Don't know actually, David. It's a really interesting question. I've never had that. Look, I don't think so. I mean, we are a business, and I think at the end of the day, but you know, again, because of the number of transactions we have done, what one thing I'd say, just
Yes.
if you allow me, is this issue of integration and what people traditionally or think of as integration has been a really interesting thing for me to consider. And we have integrated our businesses; they become part of us. We co-badge all the access control enterprise are co-badged. Even BNP is ADT Guard. BNP, it's already happened. The guys are in the team. We've onboarded them, and off we go. We're not we have not bought a big system integration type situation for years now. It's been probably 3 years since we've had to do a platform integration. Actually, we're still working on ADT itself and the core systems. That will happen over a course of a couple of years. But I think, and I say to people, if you got a new manager coming in today to run the business who didn't understand why we'd built it the way we had, you could get somebody who would say, well, maybe you could, sack a bunch of people and reshape it a bit, and you'll get more costs and da da da.
Yes.
Look, totally understand that. I think the reality, and it does kind of get to the heart of your question, is what I say to people. The really unique thing about, you called out the multiple, the three times EBITDA we've been paying. What's actually unique about that, David, is these have been high quality businesses. And so, I say to people, you could, when Warren Buffett dies, you could get a new CEO who goes in there and says, I'm going to integrate every business in Berkshire Hathaway. I'm going to get a common HR, common IT platform. It would be great to get a cash account for all those businesses the day after. I'm going to get an ERP system that's the same across all the businesses. I'm going to do an IT project that's going to do it. I'm going to create a common Berkshire Hathaway brand. We're going to rebrand everything. We're going to cut half the managers in that business, and we're going to do it. And, I'll ask you the question, how do you think Berkshire Hathaway will perform after that?
Yeah, not so good, I guess.
Yeah. And so we have absolutely integrated. So the corollary is not that we haven't integrated, but we've been very focused on retaining what's unique and different and good about what we've bought, because they have strengths that we didn't have, and we are now leveraging
Yes.
them across the group. And we've created a fabulous team. The values have driven us together, and it takes time. It doesn't happen on day one. It happens through consistent behavior and patterns. And off you go. So I think we would be different to private equity in that regard. And, ultimately, IMG Group itself, being the head entity of what is essentially three now underlying businesses, ADT, Signature, and IMS, is actually relatively small. Like, it's not a lot. It shouldn't be a lot of individuals at a corporate level. It should be a lot of people who know what they're doing, who are empowered to do the work and enjoy doing the job. So I'm not sure I would say that we are listed private equity is the short answer.
That's a great answer, and it clarifies things for me, because I guess people always like to put companies and other people in buckets. So yeah, it's kind of useful to also have a bucket and then have people understand what makes you unique as well. So yeah, that's extremely interesting. And now I'd like to jump more into the financial aspect of things. There has been some things going on regarding the tax NOLs and all of that. So maybe we could get into that. You can give us just an overview of what happened and how much will it affect the P&L and the cash flow statement.
Yeah, look, it's a very annoying situation, particularly because it actually isn't that material, but it has the appearance of being something that is material. And so the
All right.
issue is simple. A year or so after we bought ADT, and we got effectively had new auditors, the question was raised, are we sure, and it's not us, it's more the advisors that we use, that ADT didn't breach the same business test for tax in Australia. And by the way, same business test is the similar business test, so it's a slightly weaker form. And the concern was that ADT as a business was such a large transaction that it actually changed the nature of what IMG was before it bought ADT. The
Okay.
analogy that we've used with the advisors, this is a literal analogy that has been used, David, is we had a small yellow banana. We bought a big yellow banana, and are people actually disputing whether we have a banana? And the answer, the auditors and the tax advisor are, well, you may not. They may consider that you don't. And our best internal read, and we're quite like we're not foolish business people. We've got a lot of talent around our board, is that it's a nonsense, and we absolutely are the same business, and we do exactly the same things we did before. It was just a large transaction, and there's no situation where you get penalized for that. So what has happened is that through the course of that journey, the auditor has asked, we've changed tax advisor. We had to get a very quick second tax piece of advice, they were not prepared to be conclusive. And so in the end, the auditor put a probability around the likelihood of being able to realize the tax losses. And for
Okay.
the accounts, they put 40%, which was a number they've elected to be, a number. And that is what is reflected in our balance sheet today. And then ultimately the tax line that's been declared in the P&L this year. The new advice, as has been the advice pretty much through it, is that you need to get a ruling from the ATO to be sure. So we're going to have to go to the ATO and ask the question. I will be very disappointed if the ATO actually did have an issue. I think that would be crazy. And by the way, again, none of the advisors will actually disagree with us and say, no, you're wrong. They're just not prepared to say you're right. So we will have to do that work to go forward. What though? And so it made for a mess. It meant we had an unaudited accounts. The only difference between the unaudited accounts and the audited accounts put out was the probability around the tax losses. That's it. Everything else was done, dusted, move on. What it has though actually brought really to the front of the table, David, is that our amortization, which is a significant line item in our P&L, is not tax deductible in Australia. And so even though it penalises us at the NPAT level and makes it difficult to generate a strong reported net profit after everything, it is, you do take it out for tax, which means that we're very profitable today. And we are actually very profitable. And so even if, for argument's sake, the tax losses weren't available moving forward, we are starting to pay tax now anyway. And so we're really talking about an issue of something about 6 months or a year maybe of low tax or no tax. So when I came to understand that properly, I realized that we're dealing with something that is reflecting history that does have some value, probably $5 or $10 million of swing to value, but at 250 million, market valuation, it's not that material, and we will move past it in the future anyway. I think what's really also though highlighted to me is, you'll recall that we put the buyback notice in place also at the end of the last quarter last year of cash flow. That was done because, the expectation was we wouldn't generate tax credits and wouldn't pay a lot of tax for a period. And so, a buyback might be the most efficient way should we start to get in a position to want to return, capital or effectively reward investors. I think now, and it's a discussion, a decision that hasn't been made by the board yet, but I think that now we understand this tax position better, what will be looking at as we move forward is the start of dividends sooner than we would otherwise have started. And so I'm not forecasting or flagging when that will happen at this stage, but I'm just saying now, I guess on the other side of the potential small negative is that will allow us to actually go to become a proper company, which in an Australian market context will be very important and will be looked on, very favourably.
Got it. I'm not sure I quite understood the relationship between the NOLs and starting to pay dividends versus buybacks. So can you clarify that for me a bit?
Yeah, so because because we have tax losses and we haven't been paying a lot of
Yes.
tax at the point, when you pay tax, you get a tax credit, which you can pass on to your investors in the local market. And I'm not sure, it will depend on in the
Okay.
world where you are, whether you get the benefit. So effectively, so that you don't pay tax twice on your income, you get
Got it.
given a credit. And so paying a dividend before you get a tax credit is actually fairly inefficient for people here. So it's more tax efficient if you don't have tax credits to return capital, probably by way of a buyback. So that was what sort of drove the decision to put a buyback notice out when we did, and also to to protect the downside should there be a share market event or something we want to buy back a good portion of the company quickly, we
Yes.
could. So I think again, as we go through this year, towards the end of this next financial year, we'll be able to sort of discuss and think a little bit more about how we the options, and they're probably wider now.
Perfect. Yeah, okay, that helps a lot. And the other thing you might want to clarify is the ATO. So I'm not sure people outside of Australia
Yeah,
know
the,
what that
the
is.
Australian Tax Authority. So it's our tax
Okay.
department. Yeah.
Okay,
Yeah.
okay. That
And
helps
and
a
and,
lot.
to, and also just to be clear on it, we have submitted a tax return since we bought ADT, and we had no issues with the tax department. They've not flagged an issue. They've not come back to us. And if
Hmm.
they really thought there was, I actually think they would have come back very quickly. We've been guided
Yeah,
that we'll have no issues with the prior return. So it's a lot of noise that's very unhelpful and distracting. In the context of we would far have preferred to put out audited accounts straight away, job's done, we move on. But it's our job is to protect capital and to do the best job to maximize it, and so we will have to go through the journey to chase it down. I just don't think it's going to be that material for us as we go through the process anyway.
yeah, got it. I guess businesses are just messy and there's always like messy stuff happening. But I'm quite sure that sorry, go on.
Oh, I was going to say, I think in our case, because we started with a company that was, and when Peter and I joined the board, it was very overgeared, loss making, losing cash. Like it was in poor shape, and it had the reason you have tax losses is because you've lost a lot of money. So they
Yeah.
had actually spent a lot of money. I think if we had been a clean start company, it would have in this regard been a lot easier. And our disappointment around it, David, is that part of one of the reasons we bared with going through it with this entity was we thought the tax losses were valuable, and they
Right.
have been valuable so far, but they may not be as valuable as we thought they were. We'll find out. So that's why I will be disappointed if we don't get to fully use them, because we stayed with this entity and built it through here on the basis we thought they would be. So we share a sense of annoyance with shareholders around it and disappointment. But I would just again reiterate, I don't think it's that material actually to our journey and where we go. And I don't, as much as we have to talk about it and we have to address it, I don't want to get too distracted by it either.
Sure. Sure. Yeah, that helps. And I'm quite sure that if there was any problem with the first tax returns, you would get notice from
Very,
the
very
AOT pretty
quickly.
quickly. Yeah.
Yeah.
Nice. And just want to ask you, how much time do you have left before you have to go?
I've the time, all the time you have, David. I'm totally fine.
Okay. Okay.
Yeah.
Perfect. I have a couple more questions. And what sort of bridge should we expect in terms of normalizations from the this event or other events that might be happening? So going forward, how should we think about normalizations in general?
Look, now we're exiting the ADT acquisition period. That first year where we were transitioning from JCI's systems, the refinance last year, which was hugely expensive but hugely beneficial, and then quite a lot of change in the business. There was a lot of I guess redundancies and repositioning people. going forward, there will continue to be business improvement activities, and we will call them out, and it will be for shareholders to decide, whether they're one-off or what, but we will make note of them, but they're not expected to be particularly material, David. So we're trying to run, as we move forward. I think it's a difficult balance, because I don't think we should be penalised for continuing to improve at the business, given we did buy turnarounds and we have been putting them together. So I'm trying to we want to get the balance where people truly understand the earnings power of the business, and we'll do our best we can to highlight it, because it is a very strong business, and as we've been saying for some time, and I think people have started to see. But the materiality is completely different to the prior periods. We're not talking about double-digit $1 million of expenses and things. It'll be much more manageable, or in the event there was specific things, they'll be called out very clearly, and we'll move on.
Perfect. And Dennison, I wanted to jump into the topic of seasonality. So help us understand how seasonal is your business, and maybe break it down between segments, because obviously you have residential and you have like enterprise. So just maybe that would be very helpful.
That's actually a really good question also, David. So and we saw this last year, that there are two clear periods where seasonality impacts you, and that's Christmas. So December and January. So in our part of the world, just late December and early January, everyone takes their holidays. It's like Chinese New Year. So your
Yes.
weakest months, of the year can be December, January. Look, that being said, December, the first 2 or 3 weeks of December are very busy, because people try to cover a whole month's work in that month. The other thing, though, is there is definitely a first quarter, last quarter dynamic. And so the last quarter of the year is typically very strong. And, we certainly saw that last year and through the course of last year. And the first quarter seems to be a period of restocking, rebuilding, rebudgeting, and regoing. And so, to answer your question, the core monitoring service part of our business, which is kind of 65% of our revenue, 70%, which is very recurring, and is not very seasonal. A little bit December, January, just because of holidays, but that's it. Where we get some seasonality is around the installation upgrade work, which is now becoming increasingly substantial for us as we've grown back commercial enterprise. And so I do think we will see an element of seasonality, that you might not otherwise expect in our business. And it will be essentially, the strength will be the fourth quarter, and the weakest will be the first quarter, and second and third quarter, given you've got December and January, and they're about half and half, is about the same. So they're fairly consistent, and you've got this bit. And we saw that last year. It was a bit of a surprise. Actually, we hadn't we'd come prior to ADT, we only had a pure monitoring business. So it was very much, didn't really kind of think about these things, and it's taken us sort of seeing it a little bit to see it. That all being said, it's not, we are focused on growth period on period. And so, we kind of look to this time last year, how are we doing? Where are we at? What do we do? The other thing is, particularly around cash flow as well, is that the underlying cash flows are very stable. And again, we've got this core business that's but you do get, tax. It's not tax, but you get some expenses and things that fall, variously through the year. They seem to also fall a bit more in the start of the year and less at the end of the year. So you get some annual expenses and things that can, make for, a little bit of different variance in cash flow through the year as well. But again, period on period, year on year, sort of half year on half year, it's very stable. So it's really, and I think for us, probably the unhelpful bit in a way, but certainly we saw this last year, was because we quarterly cash report, which we don't have to do much longer in ASX. We're now big enough and strong enough that it's not a requirement. I think we have to do one or two more. It'll allow us to actually be able to articulate more clearly without it looking bad. I, I'll tell you a side story. I was on an airline board
Yes.
and was involved in an airline, and the movement in that business day to day, week to week, month to month would absolutely terrify a standard equity investor in terms of the actual cash movements. And so this is a very, very, very nice place to be.
Sure. Yeah. And I mean, the recurring aspect of your business definitely makes it more predictable. So that helps. I just wanted to clarify if you're talking about financial year or calendar year, because you mentioned the first quarter and last quarter
Yeah,
effect. So maybe that.
financial year, financial year. So our financial year end
Okay.
is June. So first quarter for us is June, September. Then you have September, December, with the last 2 weeks of December being by week. First 2 weeks of January can be a week, and again, it's just the installation. So it's technicians doing paid work, completing work, finishing it. Again, December
Mhm.
is probably better than January. January in this part of the world, you can have 2 or 3 weeks at the start of January, people on summer holidays, camping and with their
Yeah.
families and what have you. And so can be a big push into the end of December and a bit of a slow January. And then you just have budgets. And, again, we do work for some large scale infrastructure, government departments, airports. Often their budget cycles as well are June to June. So, first quarter of the year is restocking and planning, and then they go hard through the end of the year, and they also want to pay the cash by June to get it out of their budgets. So, so there is some, real business effect of that.
Perfect. Yeah. Makes sense. Now let's talk about the hot topic, which is AI. It was also interesting seeing Shanine in Osbase, I think, talking about it.
Uh, yeah.
She did great there. But yeah, I wanted to first ask you how much of the AI technology that you're implementing or looking to implement proprietary versus third-party technology.
Yeah, look, it's all third party. So we are
Okay.
essentially a reseller, a service provider, and so we're simply looking to
Yes.
match this technology. What we have done though is got an element of exclusivity around some of the product stack to allow us to develop, an early comparative advantage to hopefully allow us to get our brand presence and strength strong enough to allow us to carry through.
Perfect. Okay, got it. And now that we have that clarified, what sort of ROI are you expecting from these investments? Both, let's say, the hardcore ROI, let's say like the return on capital, or like the invested capital in those AI technologies, and also the marketing side of things, because I guess there are people that might be slow at adopting these, but there are also people that might be kind of lured into, okay, this is AI, this is great.
Yeah, well, I think there's two sides of the P&L on this. So we are a positive beneficiary of AI in our business, and by that I mean our business growth and future is positively impacted by using AI and competing with
Yes.
an industry that doesn't. That's the single biggest lever for us. So, I always say we're a positive beneficiary of this generation of technology and a leading positive beneficiary. On the cost side and our ability to improve our own business, I think we will still be there. There is opportunity. There's opportunity around call volume and how we respond. To make us increasingly more productive. One of the notable features, one of the things that Johnson Controls had done really well with ADT is they were already very advanced in that space, and we are actually already relative to others highly productive, and we will want to continue to extend that. But I
Yes.
think that's a little harder for us at the minute because we're very focused on our core platforms and getting those right first, and then we'll make the marginal investments to do it. And we have that in our own control. Like that's a timeline that won't disrupt our business, but we can use to help make us better over time. But so it's the two sides. I think, and again, I wouldn't necessarily want to sort of pontificate on the world itself, but I lived through the dot-com era, and I was an investor through the dot-com era.
Yes.
And I my reflection of it was, and we made very, very strong money on the upside, and then we were lucky to halve our exposures on the downside, so we didn't lose all our money on the other side, but we could learn some good lessons too. And a lot of those at this stage we're at with AI right now feels very familiar. And there are a lot of companies. The idea of AI is correct, and the impact of it will be correct. But we're one of the companies that, in 2 years, 3 years, 5 years, you look and say, man, AI has been so important, powerful, and positive for that business. A little, like, I'm not saying it on a quantum sense, but like an Amazon. And so, you look and go, the idea is totally right. They've just got to execute. They've got to keep building their business, and off you go. We're not valued like an AI company, so that's fine. We're not going to have we shouldn't have the experience of say an Amazon through that era. But it's very real for us. So, for those that are looking for a long-term investment where AI is positive and are struggling to find it, I'd say that we in our industry is an area that will positively very much benefit if you engage with it. And so yeah, it's exciting. The cost side though will be over time.
Sure. Yeah, makes sense. And I guess it will move so fast that maybe the tools you are investing in today are already outdated, like 1 or 2 years from
Yeah, I
now.
think the real opportunity, like I have a dream, and it's not a dream in that I can imagine us being able to do it quite quickly, but we're working with one of our product suppliers, or at least we've discussed it with them, that now, because our AI monitoring, triggers an event of a human being on site, and we activate the police straight away, and the police get there quickly, and we've arrested a lot of people this year from that. My dream is that by time the police put the perpetrator in the car, they drive back to the station, all the data around that event has been captured and put into a report, so that by the time they go to the
Oh,
station and they put someone in jail, the officer's just looking at a report and says, yep, that's exactly what happened, that's how it played out, and all they have to do is sign it off to say that's correct. And then
hmm.
what that will do in our industry more widely, being security, is it will make the police even more efficient and able to get back on the street, which is great for everybody, right? So I think, if we create our linkages like that as we move forward, again, it will become very hard for ADT not to be the preferred security partner to both customers and the police. So that's my next generation dream of where technology can now take us. And I can see that coming relatively quickly. Again, we need more penetration. We need more customers on the system probably to really drive that, but that'll come.
Perfect. Yeah, I think that's a wonderful idea, and I really hope AI helps us create a safer world. So yeah, that would be awesome. And when it comes to pricing power, is there anything that you left untapped that you think you can take advantage of in the future? Let's say
We
midterm to short
No,
term.
look, I think the biggest challenge we've got in this change is pricing appropriately. And at the moment, I think the pricing dynamic is untested. And by that, what I mean by that is, so if you go back to where we've come from to where we are today, prior to having the end-to-end service that we can now deliver with our control room through to the front-end technology and working together with the police, we were really selling a product of quite low value, and customers, found it to be of quite low value. And it was very almost cost plus pricing as distinct to,
Yeah.
valuable. Now we are selling something that's valuable. Now we're selling you true security. We are able, David, to protect your family and put a force field over the top of your house so that you can sleep or leave your property and know that it's protected. That is fundamentally different. The real question is, well, what's that worth? Is it worth the same amount of money you spend on streaming every month? Is it worth the same amount of money you spend on your insurance policy every month? Is it what's that? What is it actually worth? And one of the leading players, technology partners we have, has said to us directly, like, be careful you don't underprice this, because you probably don't appreciate how valuable it is. And so what we know is, when we have a customer who understands what we do, who has a need for what we do, when they come and find us, or we find them, we virtually hardly ever talk about price. So I think there is a lot of pricing power to this. I think it will be proven. I think we need to be careful not to go too low too early to try to drive the early adopters. What we need to do is be patient and get the story out there to get the penetration started, and actually try to hold value. And then we might need to even reassess it, because, as I say to people, and we've now put this, ADT Guard into some, incredibly valuable houses. So houses that would be worth, tens of millions of dollars, $120 or $130 a month for monitoring fees to put a force field over the top of that property is just nothing to talk about, and
Right.
so, so we need to play it through. So look, it's time will tell, but when we are now, for the first time in the electronic securities industry history, selling security. Before, we were selling a product. Now we're actually
Mhm.
selling security. And so I think there will be pricing power. I think we'll discover it as we go, but I think we're trying to find, it's early days to find what that really looks like. And my gut remains that it's probably higher, and even potentially quite a bit higher. The question is, how much penetration do you want? Do you want to look after every house in Australia, or do you want to look after just 5% of the houses, and make a lot of money that way? That's what we will have to work out.
Got it. Yeah, that helps a lot, and I think it must be a challenge to have like a business that is changing and adapt the pricing accordingly, and kind of explaining and showing to the customer, okay, this now is way different than before. So I guess it will take time as everything.
Yeah, and look, the actual challenge now has been internal, and that is, you sort of mentioned security before. Who's the customer? The other
Yeah.
challenge is our own people have to learn to sell a service now, not a product. And so,
Okay.
again, I've made the comment earlier. In the last 6 months and last few weeks, we've come a long way quite quickly, and we really have. We now understand the conversation we should be having with customers, rather than the conversation we were having with customers, and the effect on our sales and our ability to upsell now is starting to become much more, where we would like it to be and move forward. But we're having to learn it as we go. So, we're having to train it and learn it and understand it.
Got it. Got it. Okay. Yeah, that helps a lot. And sort of to wrap up these financials and valuations side of the conversation, you obviously were a fund manager, so I guess you do your own work when valuing IMG. What sort of metrics should we track to judge how much value creation is IMG really delivering?
Yeah, look, I mean, the key, because we're a low capital expenditure business fundamentally, people do use EBITDA, which, in a lot of industries is a mistake, but in our industry, because of this dynamic, it's not a bad actual driver. And so, the Comco valuation metrics tend to be EV, EBITDA as a like for like comparison. I run my own discounted cash flow analysis, I'm sure, as everyone who invested does. And, like, it is driven from here, by net present value of effectively EBITDA translating to cash, and what is the growth rate. And, I think, it's a very stable industry. So, a terminal growth of GDP and GDP plus CPI is very sensible. So it's got a starting value that's high. And then I think, if we can incrementally grow and accelerate that growth, it has quite a marked impact on valuation. So, yeah, I'm driven effectively by EBITDA, and cash is what I focus on.
Yeah, okay. I think that's pretty standard and makes sense due to the structure as you mentioned.
Yeah,
Yeah, so that
yeah.
helps. And trying to also get a better sense of your residential business. So Maybe we could just talk a bit more on that. If you have anything relevant that we should consider about residential, how is it tracking? How is it going forward? And yeah.
Look, absolutely. So I mean, the first comment I would make is residential is actually relative to commercial and enterprise, and even security monitoring is the smaller part of our business. So even though with
Mm.
ADT people would assume residential, it's actually it's a very lowly penetrated market now in Australia, and frankly, has been going sideways to declining over the last 5
Okay.
years. Residential intrusion systems. It's really been commercial that has held together and continued to move forward, I think. Now, at least the numbers would show. In terms of now we are starting to see some growth. And so now we are starting to see around video guard. So, and again, in the ADT space, but also through our partners and Signature and our wholesale providers and IMS, that is starting to pick up. And so on raw numbers, IMG monitors about 1.5% of premises in Australia. And of the
Okay.
premises, 9% of that premises number are businesses. There's less business buildings than there are houses, and 91% are houses. And so there is a very, very large untapped, and we are the largest monitoring player. So I don't think the industry would monitor more than 4% in total of those things. Um, in truth, David, for us, we're not as focused anymore on the distinction between resi and commercial. We are now,
Okay.
because the guarding service equally works for resi and commercial equally, we're really focused on premises. How many premises do we look after? And whether
Okay.
it's a car yard or a person's house. And partly that's because, again, we really want to go after high value. Like we're actually more, if we can choose our growth, we are actually more interested in more commercial enterprise. Actually, albeit we'll look after anybody that calls us and wants to pay, and we will market to. We're happy to look after, but because our economics, whilst they're incredibly attractive, and we always talk about the residential economics, which are about 3 times greater using video guarding than an intrusion system. They're even greater again in commercial. The more cameras, a customer has, the more money we make, to be blunt about it. So,
Got it.
and by the way, the incremental work to put more cameras up for a technician is lower. So, the ideal customer would have, 10, 20, 30, 40, 50 cameras, one guarding system as distinct to maybe a house with 4, 5, 6, and so, yeah. So, but no, we're definitely, particularly out of Victoria, as I've mentioned, seeing a pickup in the resi inquiries. We always have strong inquiries. So our actual focus has been taking our normal, good rate of inquiries and now trying to upsell them effectively or sell them a service rather than a product. And so most people that call us today are still calling because they want a camera or an alarm
Got
system,
it.
and they don't know that we can monitor that camera. We can live monitor it. So we have to explain that to them today.
Okay. Okay. Yeah. There's also that type of work, basically educating the customer and yeah, the suppliers as well, the technology providers. Nice. Now I wanted to get a bit off topic and just talk about communication and also the brand and market perception you want to, let's say, communicate to investors and clients as well. So the first question I wanted to ask you is on why have you ever thought about kind of rebranding the whole company to ADT Australia because it's
Yeah,
such
look,
a big
yeah,
brand power?
no, look, we have. I mean, the point that I'd make to people is we have 800. We do work for 800 independent security companies that aren't ADT, and
Right.
we that's the historic business we started with, and we value those relationships, and they're important to us because as they see, hopefully ADT, achieve a strong level of success, our ability to out earn the market share of ADT will actually be with our partners, who, by the way, we don't have to do
Okay.
any physical labor. Our labor is in the control room and is very scalable. So whilst I'm sure investors would be happy to see an ADT, ticker and brand and what have you, and maybe there's a value to that. I don't think that's the best business strategy for us. I think it is,
Okay.
and we operate. And to be really clear about it, ADT and Signature IMS are different businesses. Like, they don't actually, we're very careful with that customer information. We have to respect it and protect it, but it's very, we really want to be the leading security services provider, and that includes to the industry. So, so I think IMG Group, whether that's the right name or not, that was something I came up with a few years ago very quickly, as sort of stuck, I guess, maybe, but I don't think ADT by itself is the right potential brand for us today.
Okay. Okay. It was sort of just a question out of curiosity. And yeah, awesome. Awesome. And how do you think about investor communications lately? Obviously, you've gone uh, do a presentation at Coffee Microcap and so on. But in general, what's your strategy and thoughts on how to communicate with investors and how much you want to communicate and so on?
Well, I mean, we were very open, and I think you would attest to that yourself, David. I mean, if you ask a question of the company, you'll get an answer, and and my mobile number is a public number, my email is a public number, and the staff and the team around me, and I'm only one member of 600, are also equally open and happy to discuss. And we have the mindset where we want to be co-shareholders. We don't view it as an us and them thing. Like, we're looking for partners. And for me, I've always said it to all the institutional investors and professional investors, like, I would rather you take your time to understand us than think that it looks really exciting or something and buy us without really knowing what you're investing in. So we're very happy to take the time. In terms of consistent communication, we have we've made commitments over time that we'll continue to support the people that we've started. It is a challenge. Like, it's not a challenge. We have sort of events that are fairly regular. We've got increasingly strong in-market coverage. We have 3 analysts of quality investment banks that follow us now, which is, I'm really, really proud of the quality of people that are looking at us, and their backgrounds and histories and understanding. And we go in and discuss the business with their networks when we're asked to, and sit. So so the sort of broad approach, David, is we don't say no, typically, but
Hmm.
that's not necessarily a great strategy. I think as we're getting larger, we'll do more. We have held investor days every year at the AGM. We open up, we do the AGM at our Rydalmere facility at ADT, and we take any investor that wants to go for a walk through the control room and see the business operating and how it works is completely welcome, and we encourage that, actually. So it's I guess that's the strategy. That, I guess, the thing that I find I would note is that we take in all feedback, but it's very hard to get the right message for every person. And we care about the business we're building, and we care about the people in our business and our customers and our investors. And so the one thing I have to be a little careful of is to keep taking the most recent feedback and try to change to hit that, because I used to do a lot of investor presentations, and I had a business partner who, after every presentation, would change the presentation completely because he thought the message wasn't quite right. And every meeting was different. Every question was different.
Yeah.
Everybody needs and understanding is different. So what we're trying to do is be as consistent. And I understand we made that comment at the start about the market potential. That did seem to generate, I won't say confusion, but it was something where people, I think, were a little bit maybe confused around what we were really trying to say there. And again, hopefully we've done a good job today of explaining that better. But we're trying to be clear and concise and consistent where we can be, and then and then work with people if they have questions otherwise. So, so we encourage feedback. The only thing I would say is, when we're a 100-person business and a $50 million cap business, and not with the ambition we have, I had a lot more time. So I apologize to people if it takes a little bit longer these days for me to get back, but I answer all emails myself, all calls myself, and we have external, sort of IR support, obviously engaged to also take feedback and work with us. So we'll continue to improve, hopefully, on the back of feedback as we move forward.
Perfect. Yeah, I think that helps. And I also have another question regarding the organization itself. So I heard employees were very surprised by your leadership style when you first came in, because I guess the previous leadership style, especially in ADT, was totally different. So can you guide us through what you found in terms of culture and organization when you first came in, and how has it changed in your tenure?
Yeah. Well, there were really two phases of the business. So the first was the pre-ADT period, where I took over, and the business needed a lot of work to become efficient, to actually be a going concern, is probably the way I put it. And then the second phase was when we bought ADT, which was off JCI. I think the commonality in both of those phases was, um, both businesses felt like neglected, if not abused, unloved children. So they felt like they were the businesses themselves, not the people, but the businesses and the way they were operating, and therefore sort of the attitude and the feeling. There was not a lot of pride, is probably the way I'd put it. So in both those cases, I remember getting the teams together the first day for both that I took over, effectively both of those situations, and my message to them was, um, ironically, both of them were in August. So it was August, time of the year. I said, look, by Christmas, and I said, and I think Christmas this year is too early, but by Christmas next year, the ultimate KPI and measure of success here is that when you're with your families having a barbecue, and your cousin, nephew, auntie, mum, dad relation comes up and says, oh, so what do you do? Where do you work? That you're proud to say you work with IMG, or a subsidiary or relationship company to IMG. You're proud to work there, and that you're, keen to go back to work once you've had a holiday, and that they might know a little bit about what we're doing, or have seen something that we're doing, whether it's ADT or whatever. Our profile is rising. So, and if we can achieve that, then I think that will tell us, we're heading in the right direction. Now, have we achieved that? We've got bigger, we've got more people. I'm sure there would be people that may or may not feel that way on any given day, but by and large, at an average across the business level, yes, I think we're getting there. So, look, my style is, I was not I've never managed I never had a desire to manage a public company or even manage a business. I was always happy to have, the roles that I enjoyed. But I think, again, like, because of the element of focus we talked about at the start, I'm very happy to make decisions, and even material decisions, and which provides a form of leadership. And I think both of these cases, what everybody really wanted was somebody who was prepared to have a go on the behalf of the business and its customers, to try to make it as successful as possible. And so, even with customers, David, and I take calls from customers, and some, very small and long-standing customers at times who are not happy or have had an event. And, I think the fact that, I'm prepared to pick up the phone, and am, and or all of our staff, and hopefully that's the same attitude our staff have now, makes people, prepared to give you a go. And they, people would like to see us succeed. People that deal with us would like to see us succeed. We want to succeed, and we want to succeed with everybody, every stakeholder around the business. We want to do a good job for, and for us, it's not about, glory. It's not about being in the front page of the paper. It's not about people knowing who we are, or who I am, or who anybody is. It's about the internal feeling of success and doing a good job and making a difference. So I think now we have a group of people that are sharing that feeling, hopefully, and that desire. And now we've got to deliver it. Now we've got to show. Now we've got to win some championships. We've got a team ready for the semi-final of the first, World Cup, and we're looking for our first championship win. Then we want to win a whole lot of championships in a row.
Perfect. And I think that's the perfect segue to one of my last questions, which is actually, how do you retain great employees? Because I was fortunate enough to meet with Shanine, your the head of business intelligence, and yeah, she's great. So I'm kind of curious to know what sort of incentives and schemes and strategies do you use?
Look, we are not sophisticated around the financial aspects, actually, and one of the benefits we want to put in place is being listed should allow us to have a scheme where employees can participate in the value creation, and I think that is unique in our industry. So we want to create that as a comparative advantage for our people moving forward, and that's something I am keen to see happen and develop. Fundamentally, David, like obviously you have to pay people for what they do. So the goal is to be, a decent, stable, safe, good quality place to work. But fundamentally, as I said, a little bit cute, like I would like to think that the people that come to work at IMG and its businesses know that life is short and they want to be part of something that's going to make a difference and be successful. And that as long as, we all have to pay the bills, we all got families and commitments and things, all of us. So everyone understands that, pay is an important feature, but it's more about the desire to be part of something that, has the potential to be meaningful. And so for me, that comes back again to that point about values and, wanting to be a part. You have a very big difference. And, an analogy I would use is, around sports and, without getting too deep and also possibly controversial, I look at the greats of sports and the differences of behavior. And you look at a Tom Brady, and I was fortunate to see Tom Brady speak. He was never the highest, he was never the highest paid quarterback in the NFL, but he was the greatest quarterback in the NFL. And so I'm sure if he just wanted to make money was his only metric, he could have made a lot more money, but he wouldn't have been the greatest quarterback in the NFL. I look at LeBron James and he may be the greatest player playing today. I don't know he's the greatest player of all time, but he has not won many championships because he's actually has the appearance of someone who values themselves first, and it's not to criticize him. I think that's completely fair to do, but you will not build. If you believe you can single-handedly win a championship, well, then that's fine. But if you believe it takes more than yourself to build a team that's going to be successful, that's not a great strategy. And so, why did people play with Tom Brady? Because they knew he had the aspiration to be great. Whether he became great or not was an outcome, right? Like it was luck, it was hard work, it was all inputs. The output was he became the greatest. And here I'd have the same attitude. Like we are trying to we are focused on our plans, our execution, what we need to do. Will it be perfect? Will it happen linearly? Will it happen when everyone would like or how they'd like? We may not be able to control, but if we can control the things we can control and we do it to a high level of excellence and consistency, we will create the opportunity. And so people that want to be part of that will want to be part of that.
Yeah, they will definitely be attracted to those values, I guess. Um, nice. So just to wrap up, is there any question that I should be asking you that I haven't already?
Well, as always, David, I enjoy your style of. I think you've got a fabulous sort of way of actually covering some real topics as distinct to too granular. Um, Look, I think at this phase of the business, there shouldn't be any big sort of surprises or secrets. It's really, you know, obviously we have a year. We're always focused on I always say to people, like, we're only as good as our last hit record. So, if we want to be a successful global band, we can't wait, we can't have 2 or 3 albums where we write some crazy stuff and then come back. So, so we understand that we've got to sort of deliver in the short and medium term to have the opportunity. But outside that, really, the it's really there shouldn't be any questions that are particularly surprising to anyone at this stage, that are in our control. I think now it'll be around the detail of acceleration. I think the big question here now is, we delivered organic growth last year. We're aiming to deliver organic growth again this year, and the goal is to start to try to accelerate that. When and how will that happen? Look, frankly, we don't know. We've obviously modeled these things ourselves and have a feeling, but the next moment will be when we start to really see acceleration. And of course, when that happens, I think that'll be really we'll be very keen and happy to talk about that, with everyone, and it'll be a nice period to be in. But sometimes success like that comes in hindsight too. Like, we may well be through that before we feel it.
Yeah, I think that's definitely right. So I just wanted to thank you for your time. It's very precious, and I value it. So thank you so much for agreeing to do this again.
No, David, I think you're a star, and I actually really enjoy the way you operate. So thanks for the opportunity to talk about the business.
Isn't it crazy that 80% of you aren't subscribed? So if you made it this far, here's my promise. Follow or subscribe for free, and my team and I will make every episode 1% better. Check out the last episode too if you enjoyed this one, and thank you so much for listening.